Welcome back. Now let's revise composition scheme. First, let's understand the difference between composition and regular with this diagram. Now in composition scheme, output tax is paid at a lower rate. And can you collect tax from customer? The answer is no, you cannot collect tax from customer. Now when we talk about regular scheme, you have to pay full rate of tax applicable on those goods or services. Coming to ITC, a person under composition scheme cannot avail input tax credit, while regular scheme ITC is available. So what happens is that the tax which is paid on purchases or inward supplies by a composition dealer becomes his cost because he cannot avail ITC. Then coming to RCM both have to pay tax at full rate. There is no option available if there is RCM applicable, because a person under composition scheme is also regarded as a registered person. A person under regular scheme is also a registered person. So if there is a tax liability under reverse charge mechanism in any of the points, then in that case tax has to be paid under RCM at full rate by both composition as well as regular scheme person. The only difference is composition dealer will not get ITC, while the regular dealer will get ITC subject to other conditions, which we will see in ITC chapter. Collection of tax from customer we have already discussed. Composition scheme cannot, while regular scheme person can. Payment is done on a quarterly basis by 18th using a form CMP08, while regular scheme person pays on a monthly basis by 20th. What is the GST return filed? Composition scheme person files GSTR4 on an annual basis, while regular scheme person files 1 and 3B. Now the next important question is, who can avail composition scheme? Now there are two composition schemes available. One is 10.1 and 10.2 and the second one is 10.2a. 10.1 and 10.2 deal with manufacturer, trader, restaurant service provider. 10.2a talks about anyone who cannot claim 10.1 and 10.2 can opt for 10.2a. That means basically it is related to service industry. Now, who can avail composition scheme? A person whose aggregate turnover in the preceding financial year does not exceed 1.5 crore. And this 1.5 crore is 75 lakhs for 8 states. Which are these 8 states? MTNM, Masu, Manipur, Tripura, Nagaland, Mizoram, and then Meghalaya, Arunachal Pradesh, Sikkim, and Uttarakhand. For these 8 states, 75 lakh limit will be used. So if a person has branch in these states, then 75 lakh limit will be considered. Now, one very important term is aggregate turnover. Now, aggregate turnover includes taxable supply. It includes exempt supply, interstate supply, and export of goods or services. But it excludes GST and inward supply under RCM. Careful. Inward supply under RCM is given in the exclusion to give clarity, saying that RCM, though you are going to pay the tax as a registered person, still it will not become part of your turnover. That is the reason why inward supply under RCM is there in the exclusion. Otherwise, if we apply general common sense, never can inward supply be considered as my turnover. Turnover would mean outward supply. So inward supply under forward charge is also not part of aggregate turnover. Then it is calculated on a all India basis for all the branches under a single pan. Negative list. Negative list is not turnover because it is not a supply. As it is not a supply, it will never become part of turnover. Okay. Composition. There is one special point for composition which you should never forget. In any computation, in any place, interest on loans, deposit, advances will not be considered as part of turnover. In aggregate turnover, some places turnover in a state is used. Anywhere in any calculation, interest will not be considered, but this benefit is only for composition scheme. Don't mix it with registration chapter. In registration chapter the benefit is different. In registration chapter it still forms part of turnover, but while checking whether you are eligible for composition, while making a calculation of how much of tax you have to pay, interest is never included for composition scheme. Be very careful. Which interest are we talking about? Interest on loans, deposit, advances will not form part of turnover. Then coming to the not eligible category, which is very important. First, if a person is making a interstate outward supply, remember interstate purchases no problem, but if he is making a interstate outward supply, then in that case he cannot avail composition scheme. It could be interstate outward supply of goods or services. Second, manufacturer of specified products. Which are the specified goods which are mentioned? Pan masala, tobacco, ice cream, aerated water, and lastly bricks and tiles. And bricks and tiles are of various categories. It could be fly ash bricks. Fly ash bricks is the grey color blocks. It could be building bricks. Building bricks are those red color bricks. Then it could be bricks of fossil meals. These are leftover. And then tiles. When we talk about tiles, the law talks about earthen or roofing tiles. Both the kind of tiles are there in the exclusion category. So if you are manufacturing these, you will not get composition scheme. Careful, manufacturing these. A trader is still eligible for these, but if you are manufacturing, you will not get composition scheme. Then supply of non-taxable goods or services. Non-taxable goods or services is the 6 products: alcoholic liquor for human consumption, 5 petroleum products. So if you are supplying those, not manufacturing, here the word supply is used. If you are supplying these, then you will not get composition scheme. Then supplying services through eco. Earlier goods through eco was also mentioned, but now goods is not there. So careful, only any person supplying services through eco will not be eligible. Say suppose a seller on Flipkart, he is providing some service on Flipkart, then he will not get composition scheme. If he is selling goods on Flipkart, he will still be eligible for composition scheme. Then CTP and RTP we will learn in detail in registration chapter, casual taxable person and non-resident taxable person. And then the law says any service other than restaurant service. But any service if it crosses the permissible limit, because there is a permissible limit. If you are providing services to that extent, you can still avail the benefit of composition scheme. If you cross that, then you will not be eligible for composition scheme. What's the limit, sir? If you are providing services to some extent, that is 10% of PFY turnover in a state. Careful, the law uses the word PFY turnover in a state. That means it has to be determined for each branch separately. 10% of PFY turnover in a state or 5 lakh, whichever is higher. So say suppose my sales from calculator is 79 lakh, repair service is 1 lakh, total turnover is 80 lakh. Can I take composition scheme? Yes, I can take composition scheme because my turnover limit is not crossed, 1.5 crore is eligible, plus when I do this calculation, I can provide services up to 8 lakh, because 80 lakh into 10%, 8 lakh or 5 lakh, whichever is higher, 8 lakh is higher. So up to 8 lakh if I provide a service, no problem at all. Then say suppose I am not eligible for this. A chartered accountant or a company secretary or an architect is only providing services. Then in that case, what is the alternate to him? Can he take 10-1 and 10-2? No. Then there is another scheme called as 10-2A. 10-2A is for service industry, but here there is no limit for goods. See, in 10-1 and 10-2 there is a limit for service. That service should not cross 10% of PFY turnover in a state or 5 lakh, whichever is higher. But such limit is not there in 10-2A. 10-2A can be a mixture of goods as well as services. But those who are eligible for 10-1 and 10-2 will not come to 10-2A, because 10-2A the limit is 50 lakh preceding financial year, and in the current year also you get the composition scheme up to 50 lakh. But when it comes to 10-1, 10-2, current year also 1.5 crore, preceding financial year 1.5 crore. So 10-1 and 10-2 is for a person who is only dealing in goods plus some service to the extent of 10% of PFY turnover or 5 lakh, whichever is higher. And the last one is restaurant. Restaurant also is eligible for 10-1, 10-2. Other than that, 10-2A can be opted. Now, how does the mechanism work? See, first 20 lakh, if we talk about 10-2A, first 20 lakh, no need to register at all. Why will you simply register and pay tax from your pocket? So, first 20 lakh, no need to register. Then, for next 30 lakh, you can take the composition benefit of 10-2A. That means, you will pay a lower rate. And once you touch 50 lakh, you will have to shift to regular scheme. This is true even for goods. Goods, first 40 lakh, no need to register. Then next 1.1 crores, because you get the scheme up to 1.5 crore. So 40, 1.1, total 1.5. The moment 1.5 is touched, you will have to shift to regular scheme. Okay. Then what are the GST rates applicable? For a manufacturer, he has to pay 0.5% CGST, 0.5% S/UT of turnover in a state. On this entire turnover, he has to pay this 0.5, total 1. Never write total 1, write 0.5 CGST and 0.5 SGST. Trader also pays 0.5, but on the taxable turnover in a state. Careful, the law uses the word taxable turnover in a state. So trader is a small player, so he gets an advantage. He has to pay only on the taxable turnover, not on full turnover. Then coming to restaurant service 2.5 CGST, 2.5 SGST of turnover in a state. 10-2A, 3% C, 3% S of turnover in a state. These are only C and S rate. IGST rate is not given in the law because you cannot make a interstate outward supply. You can purchase from outside the state, but you cannot sell outside the state. That's what the law clearly provides. Now, be very careful of one particular aspect. The moment you enter into 10-2A, whether it is goods or service, 6% will apply. Now, if you are under 10-1 and 10-2 as a manufacturer, doesn't matter whether goods or some service, because you can provide some service, the rate will still be 0.5 CGST, 0.5 SGST. Okay, then some miscellaneous points. The name board has to mention that he is a composition dealer. He does not issue a tax invoice, he issues a bill of supply. 3 cases he ceases to be under composition scheme, and that 3 cases is: 1. When the aggregate turnover in current year exceeds the limits. When any condition is violated, say suppose you make a interstate outward supply, it could be even a stock transfer from one branch to another located in different states, then it will become an interstate outward supply. You will lose composition scheme. And if one branch breaks one condition, all the branches have to shift to regular scheme. Plus, the law also provides that all the branches have to take composition scheme together or voluntarily opts for regular scheme. At any point of time, you can shift from composition to regular, because just imagine composition scheme you are paying 1%. Now you say government, I want to shift to regular scheme. Government will place a red carpet for you. Anytime you can shift from composition to regular scheme. But when it comes to regular to composition, it can be done only at the beginning of a financial year. Careful, I am using the term regular to composition. Don't get confused. Regular to composition only at the beginning of a financial year. Sir, what about first time taking composition? That you can do mid of the year if you are unregistered. Like in this case, first 20 lakh no need to register. The moment you touch 20 lakh, after that, can you take composition scheme? Yes, because you are unregistered. Unregistered to composition anytime. Regular to composition only at the beginning of a financial year. So let's quickly have a look at what we studied. First, we saw the difference between composition and regular. Then we saw who can avail composition scheme, the limit. Interest is a very important point. Then we saw persons who are not eligible for composition scheme. Very important, manufacturer, don't forget. Then 10(2)(a), which is available for service industry, but there is no restriction on goods. Then we saw how does the mechanism work there. GST rates which are applicable for composition scheme. Careful about trader, he pays on taxable turnover. Then some miscellaneous points were dealt with. Yes? Okay, see you in the next video.